The euro slid to a 20-year low and came close to parity against the dollar on Monday, driven by concerns that an energy crisis will tip the region into a recession, while the U.S. dollar was boosted by expectations that the Federal Reserve will hike rates faster and further than its peers. The euro tumbled Monday to its weakest level since December 2002. William Rind, founder and CEO of Granite Shares, says the drop reflects the fact that Europe is bearing the brunt of the crisis in Ukraine.
Unfortunately for Europe, the effect of certainly Russia-Ukraine has been more amplified than it has been here in the States. And certainly energy prices much higher, relatively speaking, in Europe than here. So the impact of higher commodity prices has been felt more in Europe than it has in the States so far.
And some fear it could soon get worse. The biggest single pipeline carrying Russian gas to Germany, the Nord Stream 1, began annual maintenance on Monday, with flows expected to stop for 10 days. Governments, markets, and companies are worried the shutdown might be extended because of the war in Ukraine. But while the euro is sinking, the U.S. dollar is soaring. The U.S. currency has gained on expectations that the Fed will continue to aggressively raise rates as it tackles inflation. The Fed is expected to lift rates by another 75 basis points at its July meeting. The strong dollar is good news for U.S. travelers going overseas this summer, where everything from hotels to restaurants to shopping will be at a discount from prices just a few months ago.
The U.S. Food and Drug Administration has received its first ever application to review whether a birth control pill can be sold over the counter. The contraceptive in question is currently a prescription drug sold under brand Opal. Pharmaceuticals company Perrigo said on Monday its HRA Pharma unit logged the request, which comes on the back of the U.S. Supreme Court's decision last month to overturn the 1973 Roe v. Wade case that legalized abortion nationwide. Kelly Blanchard is the president of nonprofit IBIS Reproductive Health.
Now, if you want a birth control pill, you need a prescription, which means you have to find a healthcare provider. You need to schedule an appointment. Those things can be costly. You may or may not have insurance that covers them. You need to travel to that appointment. You might need childcare, time off work. So all of those things really add up. We have three key goals about this switch. It needs to be affordable. It needs to be covered by insurance and also available of all ages. So a lot of the work we have been doing over the years has involved trying to find ways at the state level with companies, with insurance companies, employers, also at the federal level to make it possible for your insurance to cover that birth control pill without requiring a prescription.
HRA Pharma expects the FDA to hold an advisory meeting and approve the application in the first half of 2023. The FDA declined to comment on the submission. Currently, the only non-prescription contraceptive drugs available for women are emergency oral pills that can be taken within 3 days after having unprotected sex. Abortion rights activists have stepped up calls to make mifepristone available over the counter. Mifepristone, together with misoprostol, can induce an abortion up to 10 weeks into a pregnancy.
U.S. stocks lost ground on Monday as investors braced for a week loaded with crucial economic data, including a key reading on inflation and the unofficial kickoff to second quarter earnings season. William Rind is founder and CEO at Granite Shares.
We'll get CPI numbers again on Wednesday this week, so that's another thing that the market is assessing. Expectations are that the inflation number will be high again. People are looking for indications that inflation might start to cool. The other thing is that really you could argue that the performance of the stock market so far to date has been around expectations around future earnings, less about the actual numbers themselves. But I think really what's key is the commentary from the CEOs around what they expect the business environment to be like going forward.
Results from big banks, including JP Morgan, Citigroup, and Wells Fargo, shares of which all fell Monday, are expected to launch the second quarter reporting season later this week. On Monday, the Dow fell 0.5%, the S&P 500 lost more than 1%, while the tech-heavy NASDAQ ended down 2.25%, pulled down by mega-cap growth stocks, including Apple, Amazon, and Google parent Alphabet. Twitter shares tumbled more than 11% in the wake of Elon Musk saying he intended to terminate his deal to buy the social media company, and shares of Musk's Tesla fell 6.5%, as some market participants saw future litigation with Twitter as a potential distraction amid growing worries about the economy and mounting competition from rivals.
Twitter fired back at Elon Musk on Monday, accusing the world's richest person of knowingly breaching an agreement to buy the social media firm. It comes days after the Tesla CEO sought to back out of the $44 billion deal, accusing Twitter of breaching its obligations under the merger agreement. In a letter sent to Musk dated Sunday and filed with regulators on Monday, Twitter refuted the claim, calling the attempt to scrap the deal invalid and wrongful. The letter also stated that the merger agreement remains in place and demanded Musk's side comply with their obligations under the contract. The company is planning to sue Musk to force a completion of the deal, a threat he laughed off earlier on Monday when he sent a series of tweets mocking Twitter and its threat to enforce the agreement in court. Analyst Dan Ives, managing director at Wedbush, said it's all a loss for both sides.
Reputation-wise, there's not a clear winner. I think to some extent they're both losers regardless of how it all plays out. The worst that could happen from Musk is that the court ultimately rules he needs to buy Twitter, something he doesn't want to own. That obviously, if you look up the term awkward, that would probably be the definition of what happens there. And I think at that point it's probably likely some sort of settlement if that ultimately ended up. Because look, for Twitter, the last thing you want is someone owning your company that didn't want to own in the first place.
People familiar with the matter told Reuters Twitter is planning to file a lawsuit early this week in Delaware.